Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets. Euro-dollar. Another new recent high close yesterday, and almost a new high. It was nevertheless the highest close since April 22. It was also a fifth bullish white soldier. Now, as you know from me pointing out over the last few weeks, we have seen the market capped by the rising middle time, currently 109.80, which is highlighted in bright red on my daily chart, and that's of the late November 22 to early January this year bullish Andrews pitchfork. I was recently inspired to draw a bullish shift pitchfork for the same move, primarily to see when any crossovers would be, and lo and behold, we had a crossover this past Monday, and another due on Thursday next week. You can see the crossovers highlighted in light red circles on my daily chart. These tight crossovers are usually accompanied by one or more of the following: a change in trend, a reinforcement of an existing trend, and volatility. I had a concern that this past Monday's tight crossover may be a peak for this market, especially as the interesting but untested 50% Fibonacci line of the January 21 to September 22 move is nearby at 109.44. Well, it does look like it was a peak, but not a durable one, as we have seen yesterday. Looking at the newer bullish shift pitchfork, I suspect the upper tie, currently at 109.47, may be taking over the role of a cap on this market, at least for now. Now, going back to the bullish Andrews pitchfork, this has been showing the bullish angle of attack here since the start of the year, so I would still subscribe to that, at least for now. Meanwhile, support below is again, unsurprisingly, the May 2020 low at 107.66 and the April 20 low at 107.25. Plus, I'd also add the middle time, currently 107.62 of the bullish shift pitchfork. So far today, well, a slow move higher, a very cautious move higher, with also a new recent high today, but then backing off from the overhead 50% Fibonacci line. Cable, aka sterling against the US dollar. A reactionary bullish closing white Mariposa yesterday as the market decided after testing lower earlier this week that it didn't like being down there below the combination of extension of the breached lower trend line, currently at 123.63, of the September 22 to January this year ascending wedge pattern, plus the 50% Fibonacci line of the June 2021 September 22 move at 123.16. Now, I've highlighted the ascending wedge pattern in dark blue on my daily chart. The market had previously pierced both these supports, but was unable to reach the next support of the June 2020 low at 122.48. Overhead, we have resistance at this week's high at 124.47, which mirrors December last year's high at 124.45. I was recently inspired to draw a bullish shift pitchfork for the same period as the bullish Andrews, primarily to see where the crossovers were. These are in mid to late February, but what I found interesting was how the middle time, currently at 124.87, capped the market last week and earlier this week. I've not highlighted this bullish shift pitchfork, as it would make me dizzy looking at it, but the middle time is there as resistance, and so far it's done a good job. Anyway, apart from these pitchforks, the late September to late November 2022 ascending wedge pattern is still one of the most relevant patterns here. Prices have previously managed to reach the primary target for this pattern in the 124.20 area, though we still have opened the secondary harder to reach target X3 up in the 128 even area. So far today, well, it was a cautious move higher, but we've pulled back down to the extension of the lower trend line. Euro sterling. A combined bearish dark cloud cover pattern, bearish closing black Mariposa yesterday. This seems to be a final action in the recent move higher, started from last Friday's bullish engulfing pattern. These recent moves higher had been a somewhat counter-reactionary move after earlier attempts lower had failed, especially in trying to penetrate the combined supports of the April 2021 high at 87.19, and perhaps more importantly, the swirling entwined mass of the medium moving average, currently at 87.33, and the short medium moving average, currently 87.32. These two moving averages had made what I call a mutated golden cross towards the start of January, with the moving averages entering the wrong way around, followed by a genuine golden cross 2 weeks ago. They now seem welded together, Meanwhile overhead, well, yesterday the market peaked at the 50% Fibonacci line of the March 20 to March 22 move at 88.51. You may remember this resistance was the cap of the roof pattern seen back in November last year. With this peak, it'll be interesting to see what happens next. Now, so far today, indecision with a little move lower, but not by much. US dollar against the Indian rupee. A bearish double yesterday as the market peaked for a second consecutive day at the slowly rising medium moving average, currently 81.80. Thus we see the end of the reactionary response caused by last Friday's first dip and close below the recent 50% Fibonacci line at 81.13 and tested the early August to date uptrend, currently at 81 even. I have highlighted the uptrend support in bright red to not only show it more clearly, but also to acknowledge its role as the lower trend line in the August-September 2022 ascending triangle pattern. That was so influential during autumn and winter last year. Now, one other fact I'd like to introduce here, I've previously drawn an October 22 to January 23 bearish Andrews pitchfork, which I've conveniently highlighted in dark blue. The market is at the moment in between the upper time overhead, currently 82.25, and the middle time below, currently 80.15. Well, I was recently inspired to draw a bearish shift pitchfork for the same move, and I noticed two features. Firstly, the middle time of the bearish shift pitchfork, currently at 81.58, is mixing in amongst the action, the market action right now, and is seemingly acting as a closing based resistance. So keep an eye on that. Secondly, the lower time, currently 80.23, had a crossover with the middle time of the bearish Andrews pitchfork, currently 80.15, earlier this week. Now, as anyone knows, my commentaries will testify. I always say that when you see have such a crossover, look out for one or more of the following to happen: a change in trend, a reinforcement of an existing trend, and or volatility. Well, this week has starred one or more of these three, actually. However, before you get too carried away, please remember yesterday's high was capped once again by the slowly rising medium moving average, currently at 81.81. With the short medium moving average, currently 81.99, also not too far away. Finally, as I've said in recent days, the big pattern here, and I suspect the reason why the supports below had become very influential, is not the bearish Andrews pitchfork, though it is big enough pattern on its own. Rather, it is the action since September 2022 to date, forming a large double top Adam and Eve type. We are currently on the final leg moving lower, and this pattern will very much depend on whether the market will drop down to the neckline of this pattern, which I'm currently indicating as being in the 80-20 zone. Once there, if we get there, then it will depend on what the market will do. The immediate question I have here is more succinct. Is the action over the last 2 weeks or so an inverted roof pattern in the making? I've highlighted what may be one of the slopes in purple on my daily chart. Now, so far today, a move lower, capped by the middle time overhead bar of the bearish shift pitchfork, but also looking like a possible indecisive doji cross right now in the making. US dollar against the Brazilian real. A second bearish black crow yesterday and a nice follow-on lower to the previous session's combined key reversal down and bearish engulfing pattern, if only just on the latter. To be honest, the bearish engulfing pattern wasn't that hardest of all things to accomplish, as the earlier session was an indecisive doji cross, though with a long tail. Prices this time punched down through the support at the 38.2% Fibonacci line of the June 19 to May 20 move at 510.87, as well as the 38.2% Fibonacci line of the March 21 to May 22 move at 507.39. But halted ahead of testing the 61.8% Fibonacci line of the June 2019 to May 2020 move. This was interesting not because of this Fibonacci line, but because just underneath it is the middle time, currently at 504.68 of the well-bashed and broken July to September 2022 shallowly bearish shift pitchfork. This pitchfork is highlighted in dark blue on my daily chart and had seemingly repaired itself despite some earlier onslaughts. Further down, beyond the middle time, well, on my daily chart we have a relatively free zone, down to the 50% Fibonacci line of the October 2019 to May 2020 move at 496.61. However, the last few times we have seen the market try down into this zone, well, we've seen support emerge at the following levels: 503.33, 501.80 and 500.73. so caution. Meanwhile, overhead, we still have the 50% Fibonacci line of the March 21 to May 22 move at 522.76, plus the flatlining medium moving average, currently 524.87, and jinxing short medium moving average, currently 525.79. And that is before we can even reach the combination of the 50% Fibonacci line of the May 20 to April 22 move at 527.37, and a declining upper time, currently 527.69. Over all of this, perhaps the most interesting recent action had already partially happened by the 12th of this month, and that was the setup here for a monthly key reversal for January. If we close on the 31st of January, either under 518.51 or over 528.60, then we'd be on. Anything in between will have the lesser outside month pattern. Right now, well, we are well within monthly key reversal down territory. US dollar against the Mexican peso. A fourth bearish black crow yesterday, but it was also a lower yet still indecisive spinning top pattern. This follows on from the previous session's action where the actual action was pretty close to being an inverted hammer pattern. This is an interesting pattern as it is traditionally seen as a bullish reversal pattern, but the data indicates it is a bearish continuation pattern almost 7 out of 10 times. Alternatively, it could also be seen as a lopsided indecisive spinning top, with the spinning top part close to the low. Yesterday's action did not clear up which of these two patterns was the actual action we saw. Additionally, it was another day this week where, in this case, the small main body of the day's action straddled the well-broken upper time, currently at 1876.47, the big old March to July 2022 bearish Andrews pitchfork. I would so like to retire this pitchfork, but as long as the market keeps doing what it does, like it is, providing dynamic support or resistance, I will keep it on despite the cluttering on my daily chart. Overhead, the cap on the day's action was the congestion at the 1885.40 area, which was interesting, but we still have a little higher, the middle time, currently 1899.22, of the late September to mid-December 2022 bearish shift pitchfork, which I have conveniently highlighted in bright red on my daily chart. Was further below, we have the old neckline of the January to May 2021 head and shoulders top, currently at 1868.32, as well as the lower time, currently 1863.02, of the large March to July 2022 bearish shift pitchfork, which is highlighted in dark blue on my daily chart. These two are now separating out, and their combined force is accordingly dissipating. So far today, a reactionary move back up, seemingly utilizing the broken upper time, currently at 1876.47, as a V base, but as yet not testing the congestion at 1885.40.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.